Series. Today we're going to talk about a new topic, and it's that Uber and Lyft are both expanding into upstate New York. And so along with that comes a set of requirements if you want to be a driver. We're going to talk about what Uber and Lyft says those are, and we're going to talk about what New York says those are, and then we're going to talk about what they really are, because there's a difference between all three, and you need to do some of each in order to make it work the best way for you. So Uber and Lyft have been fighting with the state government in New York for like several years, and they finally come to an agreement about how to handle Upstate. And with that having been finalized, they've allowed early signups. So Uber says that they've got 50,000 people signed up already for Upstate New York, with 10,000 of those in Syracuse. And Lyft hasn't released any numbers, so we don't know how many there are there, but you could say conservatively there's probably 50,000 people ready to drive in that part of the state. Not everybody can sign up. Uber and Lyft have their own set of requirements for who can drive and who can't. They both agree that you have to be 21 or older. You have to pass a certain background check. Lyft requires a DMV check. You have to have a relatively new vehicle, no body damage, kind of basic things like this. And so those are Uber and Lyft's requirements. And then in addition to that, the Department of Motor Vehicles in New York has said that they're going to have their own set of requirements, but those haven't been released yet. We expect that Uber and Lyft will both be operational probably this summer, so maybe 2 months, maybe 3 months. It will kind of depend, though, on the Department of Motor Vehicles there and if everything can get smoothed out, but they have come to an initial agreement, so the wheels are in motion for that. If you think that that's all that you need to be a successful driver, you're going to have issues with that, because you don't just need to be 21 or older, have a driver's license, and have a decent car. You actually need to go a little bit above and beyond that, because you are an independent contractor. So the federal government views you that way, the state government in New York views you that way, Uber and Lyft both view you that way. So along with being an independent contractor comes some business responsibilities, because you are technically a small business. So you've got to do some tax filings like a 1040 or a 1040 Schedule C. Some people do a 1099, but that's not going to be as effective for you, because you're going to miss out on some key deductions. And so that's what we're going to kind of focus on for the rest of this talk, is that you need to realize that you're a business, and as a business, you get this whole world available to you of tax deductions that you might have never had before. And so if you forgo those deductions, you're basically going to pay too high of a tax bill, or you're not going to get the refund that you deserve, or something along these lines. So you need to stay on top of this, or it's going to cost you money, and we see it cost people $4,000 or $5,000 a year if they're very active in rideshare, doing full-time or almost full-time. And so as a rideshare driver, you have kind of two main deduction strategies. And the first one is the standard mileage method. And the way that that works is that for every business mile you drive, and as a rideshare driver, a business mile is if you're on your way to pick up your first fare, you're in between rides, or you're driving to pick somebody new up. So all those miles that you're out doing rideshare things, whether it's for Uber or Lyft, you count those miles, collect how many you're driving, write it down. There's tools out there that you can use, but the odometer works really good. Push that little button on your dash, and just every time you're done, you have a new number. This way you don't have to sort trips or have GPS indicators going off in your pocket all the time. It's kind of easy just to do it manually. We found actually most people are successful that way. And so for every one of those business miles you drive, you get 53.5 cents in tax deductions. An easier way to think about that maybe is for every 2 miles that you drive, the IRS is going to give you $1.07 off of your next tax bill. So that adds up really fast. The reason why this mileage deduction exists is because it's the government's way of subsidizing the cost of using your vehicle for business. So government wants business to grow. It especially wants small business to grow. Small business people often use their vehicles to do different kinds of work-related activities. They want to help you out with that and subsidize some of that cost. Hence, every mile they give you a little bit of money off your taxes. Now that money, that 53.5 cents per mile, is calculated by the IRS. It's recalculated every year, and it is supposed to be enough to compensate you for gas, car payment, auto maintenance, towing, and then any kind of depreciation that you might have otherwise had. So you don't have to track those things when you use this method. And the neat thing about this method is that when you do the math on it, like we've done, it ends up being a more generous deduction than you would get if you had actually tracked out your gas, your car maintenance, towing, car payments. You add all these things up, right? 53.5 cents ends up being more money than you would have otherwise gotten. So this is really a good way to do this. The exception for that is if you have a really gas intensive and maintenance intensive vehicle. So there's some drivers out there who've got like stretch limousines that seat like 20 people. These are really gas intensive, they're really maintenance intensive, and these usually cost more than 53.5 cents per mile to operate. So if you're just a regular driver though, with, you know, like even something really nice like an Escalade or something like that, you're doing Uber Black or whatever, 53.5 cents is probably going to cover more than all of those things added up. So an example is, it's the end of the year, you've driven 5,000 miles, okay, for a rideshare that year. You multiply that by 53.5 cents. That gives you a tax deduction of $2,675. That's it, right? No, you actually get more than that. So in addition to your per mile deduction, you can also deduct all the cost of tolls, part of your cell phone bill, car washes, parking fees, passenger snacks and drinks, you know, bottled water you have in the back of the car or whatever. That stuff's a tax deduction, so track that. Food and drink when you're on the job, you can deduct some of that as well. And then if you're leasing your vehicle, the interest portion of your lease payment, that's a tax deduction as well. And then if you have any paid apps that you have just for rideshare, like maybe you have MileIQ, right? I think it's like $50 a year. Well, that's a tax deduction. So if you keep your invoice from them or whatnot, you'll be able to prove that you get that as a tax deduction. So let's say you have, you know, you get this 5,000 miles multiplied by the mileage rate, gives you $2,675 in tax deduction, plus all of the expenses that I just listed as well. So that's method number one. And method number one is usually easier, and it usually keeps more money in your pocket. So we suggest for most people that you look strongly at method number one. The second method is the actual expense method. And this approach is more tedious because you do not get this mileage, you know, round number that you then multiply by miles driven, and it gives you the meat and potatoes of your tax deduction. You actually have to track your gas. You have to track car payments, towing, car maintenance, all these things. And when it comes to keeping track of these kinds of expenses, think about how many times you get gas, right? Well, probably a lot if you're very active in Uber and Lyft and you have those receipts. And what if you lose them? Well, you lose a receipt, you lose money. So that's the way that that goes. So that's why the actual expense method is more complicated, because there's more paperwork for more tracking. And because usually if you add all those things up and then you divide them by the number of miles that you've driven that year, it ends up giving you less than 53.5 cents. That's not always true, but most of the time we see that as being true. So if you go to the blog post, there's a Venn diagram. It's kind of a nice little list of all the things that I just talked about, what expenses go where and which ones you can have and which ones you can't, using which method you run. And it's a really easy visual way to digest all this information. When it comes to doing the tracking itself and keeping track of these expenses and your miles, you can do it yourself if you want. If you feel like you're savvy enough with Excel and you're organized enough as a person, get some file folders and label them, you know, gas receipts, put all your gas receipts in there. Tolls and fees, you know, keep track of all your tolls and fees in one folder, maybe keep it in your car in a binder or something, and then get an Excel spreadsheet going and track these deductions all year. And if you feel like that's something that you can do yourself, then we encourage you to do that, because that will save you money at the end of the day. If you don't want to do this yourself, we encourage you to look at our tool. It's called Easy Driver. You can go to our website and check it out. It's here on our Facebook as well. And it's a paid app. We're running a promo right now. We're going to do $5 a month. And so that's a big discount. We're usually at $10 a month, so we're discounting it a lot for the sake of this promo. And we do all of this for you. We connect with your banks. We bring all your transactions over and organize them into what's the deduction, what's not. And then on top of that, we do an analysis of actual method and the standard mileage rate, just to make sure that standard mileage rate really is better for you. So we actually calculate both methods for you and then pick the one that's best and then give you your list of deductions. And so it's really an easy way to do it if you don't feel comfortable with Excel or you just don't want to do the work. Honestly, at $5 a month, it's probably going to be easier just to go with the app. But remember that being a rideshare driver, the bottom line here is that you can't just have the right vehicle and be old enough and have a driver's license and be successful. You have all these other business responsibilities going on in the background. And if you ignore them, you might get audited, or you're going to lose money, or different bad things are going to happen to you once the federal and state government start to look more closely at this, like they're doing in San Francisco right now with Jose Cisneros. He's the city treasurer there. We did a blog about this. And these city governments, they move in packs. So get ready for really a lot more scrutiny. And, just keeping your taxes in line and your accounting in line is the best way to stay clear on all that. So that's it, guys. That's it. It's a lot of information, but it's a really critical point. And so if you have any questions, comment below, and we will come back and we'll explain those the best that we can. Thanks.